Hi, I'm Dustin. I've been a corporate trainer for a number of years now, and I've been training a assistant manager training class for most of that time. I teach a lesson on interpreting and understanding basic financials and interpreting the store's profit and loss statement for a business. This is often a challenging lesson to teach because a lot of the learners don't have the basics down yet. So what I did was I designed this lesson as a prerequisite for the course so that they could learn the basics, and when they come to the course, we're all on the same page and able to dig right into interpreting and getting more information about their profit and loss statements. This is Anne. Anne is the proud owner of the Acme Widget Company. Her company has great products, loyal customers, and an excellent reputation. She and her employees have been working hard all year, and they've made money. At the end of the year, Anne receives her profit and loss, or income statement, from her accountant. How can she use this? What can she do better next year? Let's help Anne by introducing her to the 7 key terms on her profit and loss statement. There's one number that matters most to Anne: net profit. This is what she will be taking to the bank at the end of the year. But let's come back to that, because understanding the rest of the numbers will help her make this number even bigger next year. Anne's company sells widgets. These widgets are very important to her customers and are of the highest quality. The amount of money her customers have paid her for her widgets over the year is called her product sales. You can see that line on the profit and loss statement, $400,000. Now, widgets don't install themselves, and when a customer needs a widget installed or repaired, they know that Anne's service team is the best in the business. That's why they're willing to pay Anne top dollar for their service. The amount of money her customers have paid her for servicing her widgets over the year is called her labor sales. You see that line circled at $360,000. As with most businesses, the Acme Widget Company's customers pay for products and services. Therefore, Anne's product sales plus her labor sales equal her total sales. So you see that on the bottom of the screen, $400,000 plus $360,000 equals $760,000 in total sales. Anne has a great product and great service. Her customers buy a lot of both, and that should be enough to run a successful business, right? Well, it's a great start, but if she really wants to be successful, she needs to understand a bit more. First, she has to get those widgets from somewhere, and those things aren't free. This is why her product gross profit is so important. This is her product sales minus how much it costs her to buy those pesky widgets. This is known in business as cost of goods sold, or COGS. So she bought the widgets for $200,000, she sold them for $400,000, so she made a product gross profit of $200,000. It is also important for Anne to understand her product gross profit percentage, or product gross profit margin. This is the percentage of the product sale that was gross profit for her business. This year, Anne sold $400,000 worth of widgets and made $200,000 gross profit on the sales. $200,000 divided by $400,000 equals 50%. Not bad. This is a number she can track to ensure she and her employees are earning a fair profit on each sale they make. The next line on Anne's P&L statement is her total gross profit. This is her product gross profit plus her labor sales. But, you ask, shouldn't there be a cost deducted from the labor sales just like there was from product sales? After all, labor isn't free either. True, but there's no way to attach a fixed cost to labor like there is to a product. Every job will be a little bit different, and the cost will vary accordingly. This is why those costs are deducted later. Now, here's the important thing about total gross profit. This is the money that Anne has to pay all of her bills. If she doesn't have enough total gross profit, she's going to lose money. Speaking of bills, we've come to that annoying line on the P&L. Expenses. Simply put, this is all of the costs of running a business. These include all the wages she pays, the building she rents and maintains, the vehicles her service team uses, and all those pesky other expenses like office supplies, bank charges, taxes, and even the minor hockey team she sponsors. So in this business, they spent $480,000 on expenses over the year. Now we're back to the exciting part, net profit. Remember how we talked about the total gross profit and how it was used? That's right. Total gross profit is the amount of money Anne has available to pay all of her expenses. So when we take her total gross profit and subtract her total expenses, what do we get? Her net profit. This is the money that she gets to take to the bank at the end of the year. So in this business, she had $560,000 of total gross profit. She spent $480,000 on expenses, which left a net profit of $80,000. So what can Anne do to grow her net profit? Well, the good news is this is extremely simple. Simple, but not easy. She can either grow her total gross profit or shrink her expenses. Our next modules will explore how she can do those things. Thanks for watching.